Today we see a technical bottom signal in the indices and possibly in several other stocks as well. For instance, the Magnificent Seven. They are all behaving very well today, and this opens up many interesting opportunities out there. So that's what we're gonna talk about in this video. But first, welcome to the Finance Hydra channel. My name is Nathan, trader and founder of the 5% Project, which aims to help traders become consistently profitable in this market without any stress by sharing our proven strategy. To join the top 5%, just take a look at this QR code right here on the left corner of your screen or in the link in the fixed comment below. All right, now, SPY is clearly bullish, all right? It is making higher highs, higher lows, trading consistently above the 21 EMA, the exponential moving average, which is right now acting as a support level for us. We are making a bullish reaction right above the 21 EMA. This is a classic bottom signal, suggesting that yes, SPY wants to resume, to continue the bullish sentiment, because the trend is clearly bullish, all right? In a bull trend, pullbacks are nothing but buying opportunities because the risk-reward ratio is always very good when the price is close to a support level, all right? So this is it. It is a very simple situation. We are making a bottom signal, and our next technical resistance level is $524, which was around the previous all-time high area, this blue line over here. Now, QQQ is also making a very good bullish reaction right above its own 21 EMA as well. However, QQQ is a little bit weaker than SPY. Tech stocks are a little bit weaker because we lost the 21 EMA over here. We were on the verge of retesting the $434 right here again, all right? But this reaction suggests that we are gonna avoid a sharper correction, okay? This reaction is a real relief for tech stocks, suggesting that yes, our dear Magnificent Seven could turn bullish again. For instance, Microsoft, bullish reaction right above the 21 EMA. Apple, bullish reaction right above its support level. Of course, we couldn't hit the support level at 167 as we thought because, guys, this is quite funny. We have been monitoring the 167 since up here, even before Apple lost the 180s, triggering this head and shoulders chart pattern, right? A classic bearish reversal chart structure. Even before that, we were looking at the 167. What's more, the 167 is the support level of this congestion, all right? And Apple almost reached this support level, and right now we are trying to recover. Okay, we can work with that. Any recovery over here would be more than welcome because Apple, just like Tesla, has been consistently bearish. When we take a look at a few indicators over here, for instance, let me take a look here. When we take a look at a few indicators, we see that Apple did a death cross pattern, meaning the 50-period moving average made a downwards breakout of the 200-period moving average, just like Tesla. Tesla also made a death cross over here on February this year, suggesting that yes, this is a crystal clear bear market. There is no escape. The only thing that could make Tesla and Apple to reverse this bear market would be a crystal clear, amazing, very good, very strong bullish chart structure on the daily and on the weekly chart. As long as we don't see such reaction, the bearish bias will just persist. We are clearly bearish. Now, back to our Magnificent Seven over here, we see Nvidia also making a bullish reaction right above the 21 EMA, just like Microsoft, just like Meta as well, bullish reaction above the 21 EMA. So we see many stocks among the Magnificent Seven making bullish reactions above their 21 EMAs or maybe above their support levels. Amazon is making a bullish reaction, trying to trigger this ascending triangle upwards, suggesting a bullish continuation chart structure to to the technical target of this pattern, which is the size of this triangle projected in the direction of the breakout, meaning, as far as I know, Amazon could easily retest the $196, very close to the $200, which, by the way, is above the previous all-time high level. So yes, Amazon has everything right now to recover and break its own all-time high again. Google is making a phenomenal bullish reaction above its previous resistance level, which right now is supposed to act as a support level at 152. If Google loses the 152, okay, I believe we're gonna see a sharper decline, maybe a sharper pullback to the 21 EMA, or maybe even to close this gap around 144. But as long as we don't see any bearish reaction suggesting a top signal, Google and the rest of the Magnificent 7 stocks are not going to correct properly. Now, this is also applicable to Tesla, because Tesla, just like Apple, which is reacting around a support level, Tesla is also trying to react around its own support level. And this support level is relatively good. I have to confess that this support level is a very good one. It is surprising because I was not counting too much on this support level, because the 164 was a support level on May last year, all right? And it feels like it is more like a secondary support level, because the major support level is the 150s, okay? 152.37 if you are a perfectionist like me, okay? 152.37 is the major support level, because it is not only because it was a support level seen on April last year, but because when we take a look at the weekly chart over here, it is quite visible, okay? 152 is this key point over here. It is precisely the bottom level of the previous bullish pivot point over here, all right? And right now Tesla seems to be heading towards this support area, but seeing such a reaction above the 164 is quite good, okay? It is a bullish signal. What's more, the 164 is also around the support level made by this gap area over here. So we see a dual support level on Tesla, suggesting that Tesla wants to seek its next resistance levels, namely the 175 and the 21 EMA on the daily chart. What's the problem over here? Well, just like Apple, these two stocks are clearly bearish. So any bounce should be considered just as another bounce, just as another dead cat bounce, especially Tesla, which has been quite detached from the broad market for a few months right now. While all the other stocks, while everybody else was going up, we saw Tesla going down. It is clearly detached from the broad market. It is very bearish, and what could make it reverse this bearish bias? Well, as I told you guys, a crystal clear bullish reaction on the daily chart. We don't see such reversal yet, and of course a very meaningful bullish reaction on the weekly chart. So far this week, well, this week is quite bearish. We are dropping minus 4.36%. So yes, we don't see any meaningful reversal signal on Tesla, but of course I do believe that a bounce would be totally plausible. But as long as we don't see any meaningful bullish reversal chart structure, there is nothing left for us over here, all right? Now, if you are a swing trader, you are in the best position ever over here, because you can take advantage of its swings over here. But honestly, in my humble opinion, there are many other opportunities out there that are looking much better than Tesla, all right? Even for a swing trader like myself, I always favor Tesla for swing trading because, well, it is just perfect. Tesla has a very nice volatility. It is looking very good, but right now at this moment I see better stocks, and of course I share these stocks, these ideas with our members on our Telegram channel. So remember, join the top 5%. The QR code is right here on the left corner of your screen, link in the fixed comment below. So apparently the indices are making a good meaningful reaction, suggesting a bottom signal. Now you may ask, Nathan, what could possibly reject this bullish thesis of yours? Because you could be wrong, right? Of course I can be totally wrong in this scenario, but in order for SPY and QQQ to reject this bullish thesis, this bullish continuation thesis, I'm not being aggressive over here to the point of saying, oh, we're gonna make an incredible reverse. No, I'm saying that we're gonna continue the previous bullish bias. So it is already bullish, okay? So it is nothing new. Seeing a bottom signal around a support level is a quite safe trading idea because, again, the risk reward ratio is very good. Now, if SPY and QQQ loses their 21 EMAs on the daily chart again, closing below their key points, below their support levels, then okay. Then I believe that this bullish thesis will get frustrated, of course, and then we could seek our next support levels. But remember, trading is reactive. Real trading is reactive, not predictive. So as long as we don't see any technical evidence suggesting that we are wrong, we can just assume that, yes, the market will just continue its bullish sentiment. So let's pay extra attention right now because we are around a support level. We are around an inflection point over here. So if we see any bearish reaction, this could completely ruin our bullish thesis. So right now it is the time for us to watch out, be extremely careful, and of course subscribe this channel and click the like button if you still didn't click the like button, because probably you did like the video so far. So come on, subscribe this channel, support me, click the like button, join the top 5%, take a look at our Telegram channel. You have 7 days for free, so you have absolutely nothing to lose. That's my gift to you guys. I hope you all are gonna make among the top 5%. Thank you very much for your audience, my dear friends. See you guys tomorrow as usual. Stay safe. Farewell.